Hey, so this video is for Elizabeth Hobson, but this is actually one of the most important videos that you'll see in this group. This applies to everyone. So if you are a business owner, you need to watch this video. And it could actually literally be one of the most important videos you ever see about business. I know that sounds absolutely ridiculous and hyperbole, but here's the deal is if you're not familiar with the profit first method, for how to set up your business financials properly and how to manage your bank accounts, it's pretty likely that you never will make profit. You never will make money. And you're like spinning your wheels and you're kind of in business just, you know, just for the stress of it. So we don't want that. We want you to actually make money. This is called Kingdom Business Profits. So watch this video to the end. It's actually, I think, it'll really help you. So before we kind of dive in, just ignore my screen for a second. I want to mention, if you haven't read the book Profit First by Mike Michalowicz, I think that's how you say his last name. Read that book, Profit First. You don't even necessarily have to read the whole thing. And I'm just going to give you a quick synopsis. And if this is all you ever hear, it's probably enough anyway. It's a very simple system. And what it is, in a way, it's kind of like the envelope system by Dave Ramsey for businesses. And it's to make sure that you get money set aside in the proper accounts for the main expenditures for the business. And so it's really, really important that you do that. And I'm going to talk in a second about what accounts I recommend, but most businesses should be starting with 5 to 7 bank accounts. So that's a starting point. Now, you might end up adding 1, 2, 3 more. You don't want it to get too complicated, but you want to start out with about 5 to 7, and I'll talk about what those are. So you want, big picture is you want one account where all the revenue comes in. So every time you make a sale, cha-ching, the money comes into that account. And then every 2 weeks, Mike Michalowicz recommends like on the 1st and 15th of the month. In my business, I used to do it weekly, but every 2 weeks, basically, you're going to go in and transfer a certain percentage of the sales into all these different accounts. And for example, you would want one account. If you have employees, you definitely need a payroll account. Do not pay your employees out of your income account or your revenue account. You need to be saving up for payroll so that in 2 weeks, whenever payroll is due, you have the cash there. That's how a lot of small businesses get behind and have to maybe borrow from themselves to cover payroll or not pay themselves at all just to cover payroll. And so that's like a mess, a disaster. We don't want that. So you would want a payroll account. You want to be setting aside for taxes. And so you'll have a taxes account. You're going to want an account just for operating expenses. So this is all your overhead, your softwares, rent, just things that are necessary to run the business. Supplies would go in there. So you'd want an operating expenses account. And then you also want a profit account where you're setting aside a certain percentage of that revenue every single time you make those transfers, whether it be bi-weekly or weekly. You want to be setting aside a certain percentage of revenue so that the business is profitable. And then you also want an account just to pay yourself out of, and that will go from you to probably your personal checking. Go from the business, I should say, to your personal checking, and so on. So let me kind of break this down for you. Depending on your business, the percentages that you want to use are going to be different. But we want some type of allocation that's set and fixed and that you decide on for your business, and make sure that you're staying within those percentages. What's great about this is it also shows you whether or not your business is healthy, because if you are not able to basically, let's say you allocated 50% of revenue for payroll. If you're getting into 55% or 60%, then okay, there's something I need to change here. I either need to raise prices or I need to cut something. And so you can, make sure you're in the black, so to speak, in that area. So I'll show you what my accounts are. Again, this is going to differ for your business. You want to just think through, okay, what are like the big buckets that I have in my business, and what percentages of total revenue do those represent, or should they represent? And if you have questions about that specifically, comment below, and I will happily answer those questions. I'll do my best to kind of do a little bit of research on the industry for the cleaning industry. I know that pretty well, but every industry is a little bit different. All right, so for example, this is a real estate investment company that we just started. So that's why it's just $100 in there to fund it. We've got a couple properties on the market now, and so it hasn't even made money yet. But I've have all my accounts set up in advance so that when we do make money, I can immediately do my transfers and make sure that we are profitable from day one. So super excited about that. All right, so the first account we're going to have is our income or revenue. So 100% of sales goes in there. From there, you're going to want to put a certain percentage in profit. For my business, I'm actually shooting for 15% profit. That's really high. This is a very different business than like a service business or a brick and mortar. For brick and mortar, you're probably just going to want to start at like 1%, 2%, and start putting that away. If you can do more, great. But a lot of times you'll want to start small and then sort of build up. The main thing is you want to build a habit, okay? For owner's comp, we're shooting for 50%. So 50% of total revenue would be owner's comp in this case. And then 15% for taxes. That's my Social Security and all that fun stuff. So basically, the business is paying my taxes instead of me having to pay it out of pocket at the end of the year. And then we're giving 50. We're giving part of our profits, if you will. We're sort of splitting our profits between like actual cash profit in this business, and then giving towards missions. And so I have a missions account set up here. So the profit and missions are both 15 and 15. And then finally, operations, I've just allocated 5%. It's a really low overhead business. Really, all I need is a couple softwares and maybe a VA at some point. So it's really low overhead. So that's why it's only 5%. Normally, your overhead would be closer to about 20%, 25% in most businesses. Okay. So again, this is very different than kind of your typical service business, but this is how I've set it up. If you're more of a freelancer, a solopreneur, this might look more like what you would be doing. And I want you to notice that the order that I've put these in, and actually I'll click this so you can kind of see it a little bit better. So you start with income or revenue, and then next is profit. You want to be putting away for profit before you do anything else. And then next is owner's comp. And then next would be taxes. You could argue that maybe I should put taxes above. Maybe I should have put it at the very top. You could argue that, but this is how I chose to do it for this one. Negotiation missions, 15%, and then operations is very dead last. Okay, I did that on purpose. Why did I do that? Because there's a lot of psychology. Like if you're committed to putting away profit first, then if you are not able to make the profit percentage that you want, then okay, I need to go down here to operations and see what can I cut, okay? And or maybe you need to do more of the work for yourself until the business grows more. So it matters what order you're putting away money in, because psychologically, it's very easy for us as business owners to just kind of just tread water, or we're just kind of on the hamster wheel, not really paying attention to these things and not putting away money. And then, but at the end of the year, you don't really have any money left over, or you've worked really hard and you didn't earn what you wanted to. So that's why you want to take profit first, okay, and then pay yourself like your regular salary. The profit is for cash. It's to put away, to have for a rainy day, to invest in the business if you want to, or like take your family on that really amazing vacation. But you don't touch it until you have a very specific purpose for that. Okay. There's also benefits to like setting up an S corporation, LLC, where you just pay yourself this certain salary, kind of a nominal salary, and then take quarterly profit distributions that are not going to be taxed, self-employment tax. So there's a lot there that you want to think about and consider, and possibly talk to a CPA about. The book goes into a little more detail on that. And then, make sure that you're saving for taxes. And this is a separate profit account. Let's say I had employees. I'd want to make sure that I had a payroll account on here somewhere. And then finally is operations. Operations should be like should get the least priority. Not that sounds weird, but what I mean by that is, like, if you have a piece of software in your company that is costing you $250 a month, but it's not really doing anything, or you could do without it, or there's another solution that's cheaper, like that needs to be the first kind of stuff to go. So that's why I say operations should be dead last, is because there's always like a cheaper, more efficient way to do something. And so paying yourself first, doing profit first, and setting aside the money in the proper way allows you to see, okay, I'm over in this area. I need to cut this out. So, and then finally, I wanted to mention, because Elizabeth has asked about this as well, about tithes. So if you're a Christian, like me, I pay the tithe. We set aside the tithe every single week, and what we do in our family is we actually have several different bank accounts. We do sort of a profit first method in a way, even in our personal finances, where we've got different envelopes or different bank accounts for different things. So the tithe gets put away immediately, and then I pay online. I pay the tithe. I give to my church directly out of that account. So I never touch it, and it doesn't get messy. It doesn't get like it doesn't fall through the cracks or get like blended in with my regular finances. And at the end of the month, I'm like, oh no, I don't have enough money to get to the Lord. The Bible said, Proverbs 3 says, to honor the Lord from the first fruits of your wealth. And so once I have done everything I need to do in the business and taken the expenditures out and everything, then I pay myself, and from what I pay myself, then I pay the tithe. So I wouldn't take the tithe from like the top line. The principle is to honor God from the first fruits of your profit or your increase. And so as you increase, then you want to honor the Lord with the first fruits of that increase. And so the increase is what arrives on payday in your bank account, and from there, that's what we tithe on. So I hope that helps. If you have additional questions about this, please let me know. I'd be more than happy to do a whole teaching on this, or like a live training, and we could kind of do a Q&A if you guys are interested, because it's such an important topic that honestly doesn't get talked about enough. I learned the hard way in my business that this is how you're supposed to do things. And so when you set your business up like this from day one, it really helps you think differently about your finances. So hope this helps you guys. Let me know if you have any additional questions. Thanks so much.